Test, test, test. All right, we're good on OBS. Good stuff. Now we see charts. Yep. Now you see charts. Now you can see. Hey, everybody. Thank you guys for joining in. Before we get started with everything, with question and answer, I have a question from Premium Chat, or VIP questions, that I wanted to discuss first. And this comes when discussing broadening formations. So we're going to discuss a little bit of broadening formations, a little bit of time frame continuity. And the main question was this. So when we go back into a broadening formation, where does full time frame continuity, or in general time frame continuity, play a role? And this is a very important question, because if we look at the universal truths, continuity tells us one thing. It tells us price must trade in the direction of the most scenario twos, which would be like a 2 up that's green, like this green bar over here, and twos going 3, should be like this monthly, where you have a 2 down, but it's attempting to go 3 across 4 or more time frames, which shows us something like this. If the 60-minute is trending up and it's green, it's going up. If the day is trending up and it's green, it's going up. If the week's trending up and it's green, it's going up. And if the month is trending down but it's green, it's going up. All this tells us is if this condition's true, where we have twos and twos going 3 on all 4 time frames, price must be going up. So when we pair that with understanding a broadening formation, it would look something like this. This is an example. On the monthly basis in uraniums, I'm showing you this just because it's a very pretty example. Then we can look at more recent stuff. But you're going to see this. In order for price on the monthly basis to go from 1966 all the way up here, right, into $40, for price to go from 19 to 40 on a monthly basis, the month had to be green here. If that month was green, it was trying to do that. It had to be green here. And it had to be green here. In order for all of that to happen. The only other way this could have happened was if it gapped up, right? If it's not a gap up, these definitely had to be green for that to happen. So anytime the month was green, what we would say is it was going to the top of the broadening formation. So when we look at this, we can see we go into the bottom. No one would say this is a good looking chart. In fact, most people would say this is a breakout to the downside. It's a break in market structure. It's a head and shoulders, right? Whatever pattern you might see here. No one thinks this looks good. Then the second that's green, that is now the best looking chart ever, because it's attempting to go from 23 to 34 and beyond if that buyer is aggressive. So anytime the month is green here, it's telling you this month it's trying to do that. Now, this month is not today. So this month is not a day trading time frame. It's a this month time frame. In order for that monthly to get greener, and in order for this weekly broadening formation to play out, you would have noticed this. The week had to be green here and here and here and here and here. And then you'll see finally, right here had to be green in order for price to go from $20 to $35. The only other way is if it gaps. So what is continuity telling us? It's telling us this. If we have a broadening formation, this is a very important part. It has to go together. If we have a broadening formation, we go back through it. It shows you how long you have. If you have a monthly time frame in your favor, you have until the end of the month. If you have a weekly time frame, you have until the end of the week. And that's because each week you get a new open. Each month you get a new open. So depending on the type of trader you're going to be, it decides which time frames you're going to watch, right? If we wanted to be a quarterly investor, position trader, so to speak, anytime uraniums was above this, just 22.98, we could have been a buyer this quarter. And we could do that all quarter until the next quarter, right there. Now we have new information showing up, a new quarterly bar. If it's going to keep going, this would still have to be green because continuity tells us that, right? If they're going to buy it, it has to be green, right? To go up 10% this quarter has to be true. So when we look at broadening formations, we just want to understand it tells you how long you have for it to work out. Like when this goes green here, you have all quarter. Now, inversely, if we go to an intraday time frame, like a 30-minute, right here, this changes every 30 minutes, right? So if you want to have a trade you can hold all day, you have to have at least the daily time frame. If you want to hold it all week, you need at least the weekly time frame. If you want to hold this all month as a swing trader, you need at least the monthly time frame. And if you're an investor, you need the yearly time frame because it lasts all year. So the common misconception or mistake traders have is that if every time frame's red, so for example, and I'm trying to think of the best way to show it. Let's do time frame continuity bars. See if that's the right one. Nope, not quite. Let's go here. We'll just use a historical example. But if we look at the monthly here, this is the US 500. You can use the ES, right? I just don't have the real-time data for it because I don't trade futures on TradingView. But you can see anytime this month is red, if the week is red, right? That's what's showing you that that monthly seller's there. Now, that monthly seller can also show up on a daily time frame because they might not be selling Monday, but then they come in Tuesday and they decide to sell. What does that look like? Well, it would look like this. This is the monthly open. Price, you can see on Tuesday it goes up, but it doesn't go anywhere. So it was an uptrend, but it didn't go anywhere. That's something to know about. Because if the buyers were aggressively buying it and the stock was going up and it didn't go up, right? It closes lower than it opened. There must be some type of selling or profit taking going on. Now, when it reverses on Wednesday, that monthly seller is showing up Wednesday as a reversal, which tells you if this works, you will have that monthly seller every day that is red. So when this is red and this is red and this is red, that's the monthly seller. Then it gaps down on Monday. What happened? Well, you can see Monday, this is the new week. So the week opens, the weekly buyer, the daily buyer, those guys start buying when this is green. So you have at least this week and today, right? So they go up today, Monday. Tuesday, they bought more. Didn't really go anywhere, but they bought some. Wednesday, it goes up a little bit. And then that monthly seller, since we're below the monthly open, that monthly seller showed up in here, Wednesday's trading. And then they kept selling Thursday and Friday. And then Monday, right? The buyer comes in Monday. And you might be wondering, like, why does it come in Monday here and then Monday here and then Monday here? It's because Monday is when you have the least amount of evidence. Monday, the week, if we think about it, we have the month open, or the week open, and we have the day open. On Monday, they're the same level. So Tuesday is when those separate. We have the week open here, and then Tuesday's open, wherever that ends up being. When that separation occurs, you double your evidence. Because before you had one piece of evidence, now you have two distinct opens. So on Monday, they buy it, but then Tuesday, when we gain evidence, that monthly seller is still here. So on Monday, we didn't have any evidence of that seller, but then Tuesday, we gain evidence, and you can see that monthly seller was there, just a little bit, right? Didn't reverse anything. And then we'll see, Wednesday, it goes up, just very slightly, 4 points. Then it comes back in. And that monthly seller might still be there, right? It didn't really go up at all, so the monthly seller might still be there. And then it reverses here, and that monthly seller comes in, and they start selling. And then the weekly open. This is the week open. That flips red, and then you will see the week went red. The month was red. Obviously, the day was red in here. And everyone became a seller. So when we look at continuity, we just have to remember each time frame, it's showing you a piece of evidence. You don't need to have all 4 time frames aligned to make a trade. You just need at least the 60 minute and day if you're a day trader, because today and right now is governed by the day and the 60 minute. You can't tell me what's going to happen 3 months from now from a daily chart. At least it's going to be very difficult to do. But you can tell me what's going on today from today's daily chart. You can tell me what might happen tomorrow. But if the further you go, the less evidence you're going to have. Because if you're going to tell me about what's happening this year and show a daily chart, you're kind of wasting time. We should just look at the yearly and we can see what's happening. It went up and then it's red here. Now all year, potentially that yearly seller is still selling. And that yearly seller sold last month and this month. So that yearly seller is aggressive. So a monthly seller would be anyone that decides to sell this month. Anyone. And that question, what decides if it's a monthly seller? Think of it this way. If I had a gym and I was tracking who came in this week, I would have a list of everyone that walked through the door this week. Once next week starts, last week's list doesn't matter anymore. You could say, well, last week, these guys came in a lot, so they might come in a lot, next week, but you can't guarantee that. So when we look at the monthly, what we're seeing is this month, who sold? Well, pretty much everyone, right? We're at the lows still. Pretty much everyone sold. And how do we know? It's like, well, the monthly guys are selling. And obviously the daily guys have been selling for the past 4 days. And the weekly guys, we've been in a downtrend for 1, 2, 3, 4, now 5 weeks in a row. We've been in a downtrend. So they sold more, sold more, sold more. And they've just been selling her down. So everyone's selling. Monthly guys, weekly guys, right? Quarterly guys, those guys are selling too. And the yearly guys, those guys are also selling. So everyone this year is selling. They're doing it aggressively by selling at the bid. And we're going back through last year's range to try and take the other side. Well, we still got a lot of distance on that. So it might not fully complete it, but that's what we're thinking, right? It's trying to do this. Now to fully round out what we were discussing here. Since we know threes happen and we know continuity shows us how long we have for that to occur, from this open to trying to become an outside bar, what we can do is we can time signals like this reversal to cause this to happen, to cause this to go from being red to then becoming green. We can use a signal to do that here. And then we have until the closure of this bar to go after it if we're going to cause a 3. The same thing applies to every open though. If we are going to have continuation like this on the month, anytime this month is green, we could either use a signal to try and buy that right near the month open, or we can look for additional signals to keep going in this green month and keep this thing going higher. And it just tells you how long you have. So when we go to a futures, like let's say a 12 hour, just for example, every 12 hours, we're going to see 12 hours and then they came back, they sold more, they came back, they sold more, they came back inside bar, they came back right here, boom, they sold more, and then they came back and they sold more. And it's known by continuity. Every 12 hours matters. The same way every 60 matters. Like if you saw Thursday when that news came out, sell, 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 inside, sell, goes down. When this went green on the 60 minute, boom, 74 points. And that occurred in like a few minutes. That's how fast that can be. Because everyone's short and then that flips green and now they all have to cover. And then the broadening formation restarted. And let me get back to the chat here on the stream. All right, here's the next question. Forgive me, my voice is getting kind of dry. Let me some orange juice. So if you're looking at actionable signals on a monthly time frame, is that the time frame you draw the broadening formation on? Yeah, but you can draw them across all time frames. The key is not the broadening formation. The key is knowing the broadening formations happen. So like when we look at this chart, we can draw this out. We can draw this out and we can see that one, right? You can probably see this one in here. Now, the one that was back in here, this might be a little trickier for you to see, but it was like this, right? We can draw those out till the dogs come home. But what's important is just knowing it happens, right? We went into all-time highs. That's the top of everything, right? All-time highs is the tippy top. Then when this month was red, now the sellers are selling from all-time highs. Uh-oh, everyone's long, just made all-time highs. And now everyone's selling? That's not good. Because that's what a crash looks like, right? It looks like what? They go into the highs, and then the month is red here, and as long as that's red, that's problems. And then it went red here, and they were still selling. And then you'll see we actually made some new lows on the month, which is your monthly broadening formation. And then they started going the other way. And they confirmed that bottom by buying on the second month here. They're going after it again. So just like last month, right? To start the year, they bought. It went up barely. They barely bought anything. And then they reversed on the second month, and then they kept going. They kept selling more. So you can see that happening. And what I mean by knowing that they happen, it's like this. We don't want to be analyzers. Like most traders, they get on the charts and they're like, what patterns can I see today? Where's the draw on liquidity that I can figure out? It's not like that. It's like, where I know this, I have this thing. I know where price reverses. And then I'm going to go look for that in the charts. It's like that. It's not trying to guess what price might do. And what I mean is this. We know. What do we know? We know this happens. What is this? We make new highs to the previous range and new lows. So we took out the highs of this green bar and we took out the lows of it. If we know that happens, what has to happen first? Well, it has to take out the highs, okay, then take out the lows. Or we have to take out the lows, then take out the highs, right? So we know this happens, and we can agree that does happen. The scenario 3 exists. So if we know that happens, and we look at this, for example, it goes up, takes the highs out. When this goes red, we know that happens, right? So we go in here, where did that flip red on the monthly basis? Well, let's see. This was the first month of the year. Notice Monday, the first day of the month, the first day of the week. We have the least amount of evidence on the first day of the month and the first day of the week. Because, like we said before, the week open and the day open, they are the same. They open at the same price. The month open and the week open, they are the same. They open at the same price. So all three of those opens are the same. We have like no evidence on who's buying or selling this month or this week. We only really know, or let me put this better. We have no evidence who's buying today or this week and who's selling today or this week. We only have evidence, when those opens are the same, of what they're doing this month. So to start the month, they bought the defense companies. Right into the top of the broadening formation, they bought the defense companies. Then, reversal. The second day of the month, they reverse. And now anyone that bought into the highs in the defense companies at the top of the broadening formation has to sell this month. Because the second that month went red, they were in trouble. And if that stays red, where's it going? Well, once again, if we know broadening formations exist, the outside bar is always trying to take the other side of the previous range, and then everything after that is more targets for us. So when we go back, the outside bar would occur from the previous bar's high to the previous bar's low. So if we go to the daily, we'll see they sold the second day of the month, inside bar. They sold the fourth day of the month, and then consolidation. They sold Monday on the second week of the month. Then they tried to buy. Notice it went nowhere. It went 36 cents up, then started going the other way. And then they came back and sold more. On Wednesday, Thursday, Friday. You can see they sold it all in here. Then consolidation. They tried to buy it. It went up 40 cents. And then it dropped $12 the other way and took last month's lows out, causing the outside month. And then you can see they tried to buy it, and then it reversed, and they're still below last month's lows. So when we go to SPY, this becomes a lot more understandable what's going on this year. We take out last year's highs, it goes red, and it's attempting to take last year's lows. And that happened. You see up here, right? They tried to buy it, didn't go anywhere, tried to buy it, didn't go anywhere, tried to buy it, didn't go anywhere. And what I want you to notice, breakout traders, it goes up a little bit and then it goes down more. And then in breakout traders here, it goes up a little bit and then it goes down a lot more. And it comes back up. The breakout traders, it goes up a little bit and then it goes down much more. Then the breakout traders, right, it goes up a little bit, it goes down a lot more. So what's happening? We're just rejecting. And when you fail to sustain outside of a big broadening formation like this, you're trying to then go to the other side. And in the same way, if you take out last quarter's highs and you come back in and go red, you're trying to take out the other side. They're both the same thing with continuity, but you can look at it in two different ways because it's just, you're going to see it on a quarterly. You're also going to see it on a daily chart. So if we're going to align this stuff, what does it look like when we're doing this properly? Well, it looks like this. So if we go to the energies, we've been harping on these since last year, end of last year. And you're going to continue to see me talk about these all the time because it's a perfect example. This year goes green. When that goes green here, where's it trying to go? It's trying to go to the top of this tippy broadening formation, right? The tippy top of that. So if we're trying to go up there, what we can do is all year, every day is a new day. So every day that we see a seller try to sell energies, we can go and defend the energy sector and be like, nah, energies are going up this year. We're going to try and buy that. Now, it doesn't mean every trade is going to work. But if we understand broadening ranges, what we'll see in a trending market is like this. It goes, and then it broadens, and then it goes, and then it broadens, and then it goes, and then it might broaden even bigger, and then it goes again. So what do we want to do? Like, if we're a trending trader, if that's what our goal is, what we want to do is time the broadening range to buy it here, targeting the new highs, and then we can do whatever we want. We can break even or stop. We can trail prices up with a moving average and then get stopped out here. Perfect. And then you do it again. Stops you out. Let's try and get some more. Targeting the other side of this range. And then trail it up with a moving average. And then we get stopped out here. Then it goes all the way back down. Make lower lows. Another entry. Trail it up with the moving average and you're still in. And this is, if you're in a trending market, that's how we'd want to play it. So if we just go and draw out the ones that completed, we'll see slightly lower lows. And then right here, slight higher highs. We'll see slight lower lows, slight higher highs. So as a day trader, you can go in here and you could be buying energies all year. And at least, all quarter, this quarter, from what we've discussed. And that's if you're just an energy trader. And for those that are in premium, we've discussed it so many times, like, be an energy trader this year. Like, that's one place you want to be, that we can say for sure, because we have high evidence it's trending. And you'll see all these slightly lower lows. If you're just buying the rejections of these lows each day, right? You can just make money. And then when it really goes, you'll make a lot more. But it's everywhere. And this is exactly what we traded last week as a 2-2 reversal. But you'll see this. The daily gaps down on Monday, right? Monday. We have the least amount of evidence Monday, but it doesn't mean we can't trade. It was a gap down. It made lower lows. And then they bought it. So what was it? Traders will look at this and they'll say, well, it gapped down, right? True. It gapped down into lower lows or into the bottom of this big broadening formation here. Gaps down. When that's green, we have all day, all week, at least the first hour of the day to try and buy it. And if that works, we can come back Tuesday and we can try and buy it again. And they did do that. And if that works, we get lower lows anywhere in here. We can keep buying the rest of the week. As long as those days go back to green, we're good to go. Now, if you're looking at that and you're like, well, it's a gap. If we go to extended trading hours, you're going to see the gap is just a big broadening formation. You get a 3 right in here, and then it comes back into the 3 there, targeting the other side for 3%. And that makes it simpler. What are you guys thinking? I see your question on YouTube. Just give me 1 second. I want to get some water. So far. All right, let's see. I got 170 calls for this week. I swung since Wednesday. Since this is all-time highs, do you think it's will go? It's already a 300% play. Well, this is the thing. We have new energies going to be opening up next week, but we also have more evidence because each week, like we said, each week things can change because the weekly guys control what the monthly, quarterly, and yearly guys are doing. So this week, they're still buying oil. And we got a rev strat. 1, 2 down, hammer, 2 up. So if that is true, and we're not red on the week, we have to be green or else it's not bullish. If that's true, we can go to our cheat sheet and we know exactly what oil's trying to do. We have the 1, 2 down hammer, and then we have the signal. So if it's above that signal, we have a target higher on the left side of the chart here. So oil, if oil continues higher, I don't see any reason why this is bad for energies, right? The higher oil goes, the more pressure there will be to try and do something about it. And that's also, you know, a political thing that you want to be watching if you're watching and trying to understand what the war, all that stuff going on. You want to watch energy prices. The only thing we have to be aware of with the oil here is it is broadening. So if we go here on the day, you can see just how obvious this stuff was if you understood threes. Broadening formation, 3, goes up, comes back in, just barely misses the lows. You can see it dropped 7%. You can short and make a lot of money doing that. 1 gaps up right into the top of this broadening range. And then it goes 3, 17%. And then you'll see that's a broadening formation. And then the daily buyer shows up Wednesday, Thursday, Friday, buy, 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 buy. So right now that buyer's having their way with oil, but it has to stay up there. Now we're at risk of this thing coming in because the magnitude, you have to remember, with a 3, the target's only to go here. After that, we don't know because a 3 is always broadening. Could it go 180? So that's the thing is when we look at this on the year, it does have higher to go. It's been higher. So if we look here, you can see ever since 2020, we reclaimed this 3 on oil at $35. So that would put us up at 146. How do we know if that's happening? Anytime the year is green, it's like a magnet, right? You can think of it that way. Since this is a 3, and we went below it here, and we came back above, anytime the year is green, this is like a magnet trying to take us to all-time highs. But it's not a guarantee. We have to see weekly buyers in here. Because if that yearly buyer is buying this week, that's bullish. If that yearly buyer is not buying this week, where's the yearly buyer, right? They're supposed to be here, and they're not here. So that matters. It's got to be green this week, or else we don't have the evidence. Avoided? No. Gap ups? No, we do not avoid gaps. No. Where did we get that from? The way gaps work, gaps show you that new information's hitting the market. So when a gap happens, its volatility is increasing. We just don't know if we gap. So for example, if we have a broadening formation, it looks like this, right? And then it goes up, and then we gap down here. We don't know. right? It already did the thing. Price is designed to broaden. So when we look at this, price already went from here to here on the gap, right? If this has already happened and we gap, we don't know. Either it's a breakout or it's not. So either we're going through this or we're reversing and we're going completely the other way. And anyone who tells you otherwise, I wouldn't trust it. Now there is times, right? We know when a gap down is we should sell it, and a gap down or a gap up we should buy it. But that's not a mandate. It doesn't guarantee price is going to do it. It simply means if everyone is short a stock and it gaps up and everyone's still short, let me just think. Let's see. Rent. Was it rent? Anyone remember? Yeah, it was back in here. So this is a good example of what I'm talking about. So here, if you're looking at this chart right now, right, and we're just going to do replay just so you can see it. And I want to teach you how to see this stuff because it's so much more important. Because when you go through the gappers and you see this stuff, you're going to be like, wow. So for example, we have this big range, right? And we're breaking down out of the lows of it. No one's going to say this is a good looking chart. Now this is a great looking chart, right? We're coming back up to the range. We want to go all the way through this thing. When this gaps and it opens here, notice the month, the week, the day, they're all green. So when it gaps up, is it going up? Well, if the day is green, the daily buyer's here. If the week is green, the weekly buyer's here. The monthly buyer's here. So if the day is green, that weekly and monthly buyer is still here. If the day is red, that weekly and monthly buyer is no longer here. The day was green, true. Therefore, where's it going? It's trying to go all the way to the other side with a period of full time frame continuity. And you'll see, since we're going through a range of guys who were previously short, look at this. In pre-market and post-market previous day, everyone's short this thing. When this goes green, everyone's short and everyone is forced to cover as this is breaking through the previous range. So we're pairing the month, week, day, 60-minute with a gap back through a range of people that are short. Just to prove it, you can go back to the day once again. These guys are all short, right? When we open and we gap up to 964, they're screwed. Like imagine you were short this thing from $9 and then 3 months later, it gaps up to your price. What are you going to do? Get out of the short, right? Simultaneously, you also have people racing in to buy this thing, and that's no good for the short sellers. Avoid PDT? Yeah, sure. The thing with avoiding PDT is you have to go on bigger time frames. So you're going to be looking at like weekly signals because you want stuff you can sell and then come back next week and then either hold or exit, or come back a couple days later and either hold it or exit. So PDT, the other problem with it is this, and it really screws you. So let me just go see if we can get on like a 2-day chart. And we'll just use a daily. So for example, this is how it can really screw you. And then we'll talk about how we can try to not let it do that to us. So it looks something like this. Price, there's only 2 places that it's going to be actionable. And it's got to go right away. So what I mean by that is this. If we're going to make a trade, it should just go like this. So if you're using PDT, you're not going to be able to get out of the losers as fast, which means you're going to have to change it a little bit. But I want to show you what's happening. And for some reason on a 60-minute interval, it's actually not going through it. Let's see. See if we can force it to replay. All right. So for example, any previous high or low will do. Doesn't matter to us for this example. But when price takes out one side of the range, since outside bars occur, the most bullish looking chart can become the most bearish looking chart in one bar. So for example, right here. Now, I don't know if I'm going to get the perfect example. We'll see. Okay, beautiful. No one's going to say this looks bad, right? It's trending up. It's trending up. It's not going down. Doesn't look bad. Now, in one bar, right? Now it starts coming back into the range, back below the highs, looking a little bit worse. And we'll see, now it's failing to stay there. Once it starts coming back in, now it's in trouble because this is a potential outside bar on the day. And you can see it's right there. So since that happens, we have to be very aware with this PDT. Now, the defense for this is making sure you're not the first one. Not the first one in. What I mean is this. Let's say we were looking at, for example. So let's say we're looking at this. This is a 2-day chart. It could be a monthly chart for all we care. But let's say we're looking at this as our trigger. We don't have to be the guy buying it here. We can wait for this broadening formation to give us a way in here. And if it does go without us, we can still wait and get the next one. Meaning, we don't want to just buy it because there's a signal. We want to try and time the signal. So how would timing the signal work? Well, it'd look like this. And I'm just going to keep going. We got to get rid of this. There it is. So here it is. This would be closer to a reversal above this bar's high. So we have a signal, and we could say we have a small target, just as example. What we would want to do is time when that's going to happen to give us the best possible chance of staying in that trade. And the way we time it is we look for broadening formations. So for example, this is a broadening formation, the 3. Since this is inside of, you can see this previous range, we can either trade during consolidation, should be during these bars here, or we can wait for the larger part of this range to actually be taken out, which is what we'd prefer. Because once price has made these new lower lows, we now have the opportunity to change direction and take the other side of the range. So if we can time that entry off, in this case, the inside 60 here, it can put us in a place where we can instantly win. And if that works, then you get the chance to actually hold it. Now, we're looking at a 60-minute. So when we're thinking about PDT, how do we need to think about it? Well, this is how it works with PDT. And we'll go to, let's just think. We'll go to the energies. So we're looking at the energies. If we want to make a position we can hold for more than a day, what do we need for evidence? Well, we need this. Ideally, as much evidence as possible. And it looks like the year is green and it's going up this year. It's taking last year's highs. The quarter is green and taking last year's highs. We also have signals. So when we look at the quarter, we actually have a 6-month, these 2 bars as an inside bar to these previous 2 bars. So on a 6-month chart, there's your inside bar signal. So we have that for evidence too. If we go to the month, if this month is green, this month, we have that for evidence. Anytime the week is green, we have that for evidence. So if we want to get it and hopefully be able to hold it longer, not having to enter and exit intraday, we want to align the year, the quarter, the month, and the week in our favor. And we want to do it after people have gotten short or after profit taking has occurred. What does that look like? Well, it looks like this. See how this week closed red? That was profit taking, right? That it went lower, closed lower than it opened. Therefore, we can either time the entry in here, or we can look to buy it to change that week to be green. And we could go something like this, risking more. And ideally, we want to time the entry because the signals are actually they're the bigger edge to this. Because if we can know where to time it, so in this case, when the energies went reversal here, by timing the daily signal, we can see the weekly open. This daily signal changed the week from red to green. So when the week flipped green, it was going to change the month. And with we had the quarter and year, they were already green. So using a daily signal to change it into the bigger time frame is the ideal scenario. And this is why like wider stops, we prefer not to do. And you just have to realize you have a big risk. If you can't enter and exit in the same day, you got a big risk because things like this happen. And this is stuff we've seen in real time as it's playing out. It can get very, very, very violent. So for example, if you're trading at the top of this broadening formation, good luck, right? When this thing flips red on the day on PanW, they get demolished, right? The same way, this goes up here. This looks all fine and dandy. Right here on Thursday, it goes reversal on the day and it gets demolished in one trading day. And this is what can make swing trading or longer term stuff much, much harder. Again, the solution to that is trying to time it, because if we can let them go down and then try and time it anywhere near these lows, that would give us at least better odds of making a winning trade, if not seeing that much bigger trend play out. So just to show you a few examples of that. From last week, yeah, like with PDT, I wouldn't even trade options because it's not worth the risk. But here's an example. And you do this on bigger time frames. Like the bigger your time frame is, the more wiggle room you're going to have, but also the wider your stops will be. So you can't risk as much and trades take longer to play out. Where is it? We traded it. Oh, there it is. Losing my mind here. So this would be an example of how we can time that. This was something we timed during Thursday's trading in OIH. So this reversed on the second 15 minute of the day. If we can time that, at least we give ourselves the odds. If this works, at least you give yourself the odds that it doesn't come back within the same trading day, right? Same thing here. Broadening formation, if you can time that, this is right on Monday's open, at least, you know, it goes really far in your favor right away, and then you have better odds for this to not come back. So it's all about timing. And it's always going to be that way, just because you could buy anywhere on the chart, but 70% of the entries may get stopped out because you're not timing it with the lower low, and then hopefully that low holds. Like in this, right? You're just gonna see it everywhere the whole way up. Right here, right? Some slight lower lows in here, and all this fun stuff. And that means the ideal goal is to try and time it with tighter risk. If you can get some tighter risk in there, you don't have to be right on every one. Right? If you're risking $5 and your initial target's to go 30, you can take 5 of those trades, and even if only like a couple of them play out, you're good. It's like fishing. Cast out a few rods, let them hit. Yeah, so if you're gonna do many months, like we said before, the year, what are you doing this year? Well, this year, you're selling Bitcoin, right? And if you're gonna do that, the quarter is red, right? We go to the month, you'll see this on the month. So this is the first month of 2026. Let's see what they did. Here's the open of it. Oh, what happened? Weird. Well, it is what it is. But you'll see this. So the first month of the year they bought, and then it comes back. A little bit of selling. Second month they bought, or second week of the year they bought. And then the weekly, you'll see it goes higher highs in here. And notice if we go to simple strat, this was a 3. So that's a broadening formation. So when it goes up and then comes back in, now there's the reversal to time the bigger sell into all this stuff. And then if we go to what happened recently, you see this would be the top of this one. And now notice the range did get a little bit smaller, albeit you can still time this daily right at the top of it. But ideally, you want to take those big trends and try and get the big, like if we go to NVIDIA, like this. So this is like a multi-year trend, right? If we go to the year chart, they reversed in 23, they continued in 24, they continued in 25. What happened in 25? Well, the yearly guys sold it. They didn't reverse though. What did they do? 3, they sold it. And then they tried to buy it. Right? That was a pretty nice move. And then down, down, slightly lower low. So there's your broadening formation right here. And then reversal on the month with the whole market. And boom. So if you can get that stuff, the really big stuff. We go back to AMD was another good one. You can see we had a 3 here on the month, broadening formation. So they go way higher, little bit lower, way higher again. So trying to time that stuff on the very big ranges, that would probably be the best way with PDT, simply because if you were only buying or selling each month, the PDT rule never really comes into play. And you can do this, and you can go like this, right? People do this. You can go like this, and that can work. But, you know, it would be better without it. You can use monthly you can use yearly reversals. I don't know if you've been following me on Twitter. I highly suggest it because we've been putting you guys on. But here's some examples. Since we know 3s are broadening formations, let's go and see. I have to search up Val. Nope. Oh, oops, I got it. You can use yearlies. So if we look at Val on the yearly, 3 broadening formation, 2 down, and then goes green here. The second that went green, you could have been buying to go from 48 to 88. We can do that. So if we go to Val, one sec. We go to the weekly. This is when we posted that setup. And that was from, you can see, we don't have to time the perfect bottom of the range. We just have to know it's going to happen. If we know this is going to go from here to here, you can time that. If we go to the monthly, you let it go red on the month first. Perfect. Then the inside month signal, and then boom, 312 reversal to time it by using a lower time frame. So is this 312 up with a signal and a target and a stop, ideally below the low of the month, but you can widen that if you have to. In this case, it never came back, which is what you're looking for. That's 83%. That's pretty crazy. And that's not a fluke, because not only did it happen on Val, but we saw the same thing on OIH. Down and then comes back into last year's range. And that's right here. It's up 34% this year from the mention, up 51%. So we actually caught it a little earlier than the signals would have allowed us to alone. What about PBF, right? It's a 12-month entry. We can see so far it's broken it. It's up 25%. That's good stuff. And just give me a minute. All right. So intraday trading. If intraday trading right now, where the year, month, quarter, weekday, and 60 are selling, how do you time entries? Signals. T-Trade's fractal model, his model is the strat. He's just naming it different things so people understand it better. Because he will say, well, price closed back into a range. It reversed. In reality, this didn't reverse yet, though. So he's saying the reversal is occurring earlier than it technically is. Because this is not a reversal. This is still a downtrend, a 2D. But then he's saying it goes red, so there's profit taking or there's some selling. And then he times an entry to cause the 2-2 reversal, which is directly from the cheat sheet. So when you look at T-Trades, he's using the strat that we shared with him. Oh gosh, I don't even know how many years ago it was. It was over 4 years ago. But it's just this. If you look at all his stuff, it's just this. And it's also 3 2s. He's doing a lot of that. But yeah, like, this is what you have to realize. Continuity is how price goes higher. It's not an indicator. It's showing you how price is doing it. So this year they're doing it. This quarter they're doing it. These 3 months, anytime the months are green, that's when it's happening. And then anytime any of these weeks are green, it's happening. So when we look at this, what are you trying to do? You're trying to time signals below the weekly opens into year, quarter, month buyer. They're buying every time we're below these opens, right? If we go to like a 15 or let's go to a 5 minute. This is Monday last week. Goes below the open and then other way. This is the previous Monday. You can see what they do. They go down, red on the week, slight lower low. This is a broadening formation to time the exact bottom. Slight lower low, and then goes the other way. That's the low of the week. So all these guys, what they're doing is exactly that, which is what you should be doing. You want to find an uptrend and then you want to let it go down and then you want to get in. So like this. This is the weekly open Monday. Goes up and then all the way down, then all the way back up, then all the way down. You try and time the buy, you make a little. Then it comes back, you try and time the buy, you make a lot. And even if you try to time this one, you make a good amount, right? You're getting it to the other side. So if we know to buy it, we want to go here, buy that. We could even try and time this stuff, right? A little bit, comes back in. So what does this show us? We should move stops towards price. And then when we look at this weekly open, when this is green, this is our defense level. This is like if you're a QB, you throw it perfectly and your guy catches it. You're going to go make that touchdown unless the guy turns around and starts going the other way. So if your wide receiver doesn't turn around, it's going to be the touchdown, right? This would be a touchdown because once you change that week to green, now that monthly, quarterly, yearly buyer takes over, and that was all she wrote. But it's the same thing over and over. You can see this would be the weekly open. It goes up, then broadening formation, time the bottom down here, all the way back to the top, and then you can see profit taking, and this was that weekly open. So what do? Slight, you can see this is like a penny lower, and then all the way back up, slightly higher, right there, all the way back down, slightly lower. That's a pretty good buy. Didn't get all the way up, but you'll see this broadening formation. Slightly higher, then all the way down. Nice buy. Slightly lower, nice buy. And then profit taking. Gap up, profit taking, and then you'll see even more. Slightly lower low, and then all the way back up. Yeah. So like this is what we do. So if we can define what an up market looks like, we can only trade up markets. Like I'm only going to trade the trending markets that are the strongest this year. We can do that. How do we define it? Well, if the monthly is going up, it's a trending market this month. That's a pretty strong trend. That's something we look for. So we go to our scanner. Just give me 1 second. But if we go to our scanner, what we can do is we can go to the month. And you don't need this, but it makes it easy. 2 up this month. So these are the uptrends. Now there's 3s or potential 3s that could be happening. So these are the weakest uptrends, potential outside bars. But if we want the strongest ones, here it is. It's like, if you want to be a buyer and futures are going down, what do you buy? The things going up this month, of course. Then you copy that list. Now, since, last week already traded, we can actually do this, but let me just show you what went up last week. These are the strongest things going up last week and going up this month. Look at UVXY. So that's your VIX, VIX. And then we have a ton of inverse ETFs, not at the top, right? Look at all the energies, energy, right? It's like, did we buy energies last week, guys? We did. Tuesday, we did. And look at this, right? So energies, we knew to be in energies. That's for sure. It's highlighted for us. We automatically know what to be looking at. Now, when we go into any of these names, that's where the strongest signals are. How do you think a stock goes from being up 10% to being up 40%? There's a signal, and then it goes up another 30%, and the signal causes it. So when we go into any of these big gainers, right? Let's go APA. This month was green. This week was green and going up. The daily reversal occurred on Tuesday above 3950. So above 3950 goes to 4439. That's pretty good. And then when we go on the 60s, we had a gap down buy. You can see on the 25th of March. And we had a kicking pattern, which is a little bit difficult for people that don't know what it is. But it's this. This long red bar, everyone's short into the close, and then it opens here. Everyone has to cover, so we can buy that. It goes instantly. Goes all the way up here. Then you have the inside 60-minute right there at the end of the day, all the way back up. And you have profit taking, the 2-2 reversal going into Friday's close. Buy it there. So we can just do that all week because it's green this month and this week. We have all week because they're buying this month, this year, this quarter, and this week. So you got all week to go after it. So it's a matter of not saying like Sunday night, Alex, what are we looking at? What are the top picks? Right? Like that's not how this works. It's like, what's up 15% by Monday's close? Because it might go 100%. That's how you want to think. Now we can think, what are the top picks? Yeah, let's do that. What would be the top picks? Well, let's look at the state of the market and show you guys how we actually analyze it. So this past week, what happened? Since the week is closed, we're going to open a new week. We want to know what it looks like. We'll draw left or right to left. Boom, boom, broadening formation. How do we know this is broadening formation? The quarter is a 3 and it's a reversal down. So there's your broadening formation right there. If we go to the year, it's a 2 going 3. So what's the analysis going into next week? The sellers are selling. They sold for 4 weeks straight. How do we open up, right? Are we going to gap down and go gap down buy, profit taking? Or are the sellers going to stick around, right? Gap down and we're red and we keep selling. That's the only question. There's no like, we have to be perfect and we have to know to the penny where this is going to go. No, none of that. We're just going to let the broadening formation show up going into next week and we're going to see where they take it. Because at the beginning of the week, it doesn't matter if it gaps up, gaps down, goes sideways. If it gaps down into here, you're probably going to get a broadening formation. And then it's going to choose if it's going to keep going or it's going to choose if it's going to break out and start reversing. Probably going to happen. Because it pretty much has to happen. Now, if we gap up, right? Since everyone was short into Friday, right? If we gap up, okay, those shorts are jammed. So if we gap up, that's a big problem. Because imagine you sold short Friday's close and then it gaps up here. What are you doing? You're buying. For sure, you're buying. So if that's the case, we might see short covering if it were to gap up. Now, by going to the futures, they're flat, so nothing really changed. Right? War is still going on. It's still not really pretty to look at. That's pretty much what it is, right? Nothing's changed. Now, if we zoom down on the futures, you got this, but right, they're not doing too much yet. So what we can say is they're definitely selling the SPY. Does it keep going? And if we go to the Qs, this one's a little different. You'll see it was 2-2 quarter down. So it's a reversal with a target. It's 544.66 on Qs. So if this is below 580, it's going to 544 still. That's a good thing to know. You'll see they sold last month. They sold this month. You will see on the Qs, they expanded this outside week as a 2 down, still going. They're nowhere near reversing. So we have no signals, none of that. We're going to have to see where they open up. The same thing with the Dow Jones, right? 2-2 reversal month. Notice how this triggers. Triggers as something called a pivot machine gun. We have all these pivots lined up with a signal at the top to cause it. So we have this shooter's signal with all these pivots, which is how you could expect this to happen. Where you can see we get the long red bar back through pivots, right? It becomes very obvious once you know the cheat sheet. Now, if we go to the year, this gets a little different. Because SPY is a 2 up in red year, Qs is inside year. This 3, 2 up, and then comes back in. That's a little bit worse off because you have a broadening range, which may give you a target all the way down into here if that year is red. However, we open the new quarter soon and we open the new week next week. So with the new quarters opening up, is this quarterly seller still here? Or are we going to get, kind of like last year is what I'm thinking. Is this quarterly seller still here? Because this is a quarterly broadening formation. So as we come into the end of the quarter, are they going to be buying things up to, reduce at the bottom of the broadening formation? Or, what are they going to do? Are they still scared and just going to keep selling? If we go to, let's see. I think we got them all. SPY, Qs, yeah, IWM. So IWM, very similar to the Dow. You had this nice breakout. All the breakout traders on Twitter, you should have seen them. Like TrendSpider, they're like, IWM, the base breakout. Is this the net? Like, it looks like gold or something like that. Goes up 10%. Now it came back in. It's only down 2% so far. A thing to understand is if we are red next quarter, right, in a couple days, we're going to be opening it up. If we're red next quarter, we get that broadening formation down. If it went up 10% above the highs, it tends to go more than 10% the other way. Because what you're doing, kind of like this here, 50 cents above the highs, and then it drops 72 points. Oh my goodness, right? What you're doing is you're trapping the guys who are long and then forcing those guys to sell into other guys who are long, right? So it cascades. So it's more likely to move more than 10% the other way. So I still would expect some more of that. But we'll see with the new quarter. Now, since we see that, the whole market's going down, right? We've seen that on the month. We've seen it on the week. When we go to the scanner, instead of having to look at the charts, we could just look at the month and be like, yeah, everything's going down. What are we buying? Energy stocks. That would be ideal. Now, last week, most of the energies went up, so we're probably not going to have many signals there. The other thing we would be buying is utility stocks. Last week, 60% of utilities were a scenario 1. So when we go to our scans, anyone that went down last week, these are your biggest losers. Look at this, circa 50%, 30%, 28%, 27%. These guys got destroyed last week. These are all your 2s down, downtrends. If we go 2s up, we sort to the highest, these were all the biggest uptrends last week. So like we said, energies. Now, if we go inside, these are all the things where the market went down, institutions are selling, right? And if you go on Twitter, we've been saying this for months, 2 months now. If you go on Twitter and we look, let's see, hedge fund outflows. I saw some people posting the stats on this. It's very interesting. So these were bonds. Let's see. Large cap funds saw a weekly outflow of 15 billion, the largest since December of 2022. Geez, Alex, how could we have known? Well, when you look at the market and the whole market's going down this month, yeah, right? Outflows, right? They're all going down this month. That's something to know about. And everyone went down this week. So there they were. Now, where did they not sell? Right? Obviously energies, but anything that went inside week, they did not sell that. So we can copy that. And these are your 260 strongest stocks in the market. Now, as far as evidence goes, if we copy that list, what we can do is, since we're getting to the end of the quarter, we can take that list and look at the quarter, and let's see if anyone's setting up for next quarter. Anything 2 down in green? What's closer to reversing? So Mondelez International, it's a food brand. You'll see right at the bottom of the broadening formation, trying to go the other way. And it's on our inside week list. So here it is. You'll see we have the bottom of the broadening formation on the quarter. We already saw that because it was 2 down in green. Then you have the slightly lower low on the week and then the inside bar. So if that inside week works, maybe it sets up this on the month as a hammer. If you don't know a hammer, it looks like this. Hey, setting up something like this. It does not have to be green, although that's ideal. So if this were to close higher at the end of the month, that could be a little better. So if we use this weekly signal, let's say Monday, we might have the pivot machine gun on the week to try and set up the month to trigger the quarterly to reverse. And if that quarterly reverses, maybe it's an outside year to the upside while the market's going down, right? That'd be something good to know about. If they're buying that while the whole market crashes out, that'd be good to know. TGTX Therapeutics, look at this. It's outside month. So what does that show us? They were willing to buy at lower lows and sell at lower lows. So they're aggressive buyers and sellers. They're also willing to buy and sell at higher highs. Last month's highs. And then inside week. So ideal scenario here is we could have this inside week, which was stronger than the rest of the market last week, since this did not go down. And we could cause that month to keep going. And if we go to the quarter, what does it set up on the quarter? It would set up the 1-2-2 reversal, which looks like this. 1-2-2 on the quarter. So if the week works, we will have this quarterly signal for next quarter with targets that look something like this. You know, we still have a few days, so we'll have to see. But we'd have 30% to target. That'd be pretty good. Now, if we go to Charter and Liberta, I don't know if these guys are going to do, I don't know. They're kind of like very old communication companies. So take with that what you might. You can see they're very slightly stronger this quarter, but they're inside week this week. Or inside month, sorry. They're also inside week. So if we look at this broadening formation, it looks like this. And then inside week. So maybe, just maybe, you get the pivot machine gun of these guys. It's got to be aware they are some very old telecom companies, so they're probably not a good long-term hold, but we'll see. Now, if we go to T-Mobile, you'll see this. Lower lows on the quarter, and then comes back in. Inside month, so it's not going down this month, unlike some things, SPY, Qs, Bitcoin. The week is inside. So let's say the market firms up next week, right? Anyone short T-Mobile, this should be the first one they close out because it's not going down. That'd be a pretty good thing to know about. And I like that one. It would be better if we had that moving next month, but that's a good looking chart. Let's see, Netflix. So Netflix, you'll see it was going up this month, but it came back in. So these guys, you might get the broadening formation the other way next week or next month, technically both. And you'd have the inside week here. And you'd have the inside day going into Monday's trading. So if we're going to see continued selling in tech, maybe Netflix, right? I'm not too sure about that. We also do have earnings coming out soon. So maybe you get a gap up sell or something if they're really going to do it. Now you can see things that would be weaker. Bitcoin, or not Bitcoin, Home Depot, sorry. 3, broadening formation, then it went up, then it went down. And then last week, inside week. So home builders, this becomes really important. We are at the lowest lows we've seen since 2024. Are home builders, are they willing to sell into these prices? Or do we see buyers, maybe they gap down buy on Monday? And one thing I'm seeing is the price of lumber. I saw someone tweeting about it. In some places, the lumber prices are going down. So I don't know if that's so good for the home builders just because they could sell houses at much higher prices, but it does reduce their costs. So who knows? But that's, something to think about, the home building sector. I do think, this is not market crash and like it's never coming back. I do think it's probably coming back this time, similar to last year. Let's see, Logitech. So Logitech, we got the 3 in here on the week. We got the 3 in here, and we got the 3 in here. Wow. Look at all these broadening formations. Then you got inside week shooter. So it's closer to continuing down, and look at the much bigger range like this. From the top of the range, they're trying to go back down here. So maybe. And you could also set up that rev strat month to the downside. Earnings in here don't come out until May, so you got some time on it. Let's see the quarter. Quarterly already hit its targets. The year is still an inside bar, so it could jump around in there and go both ways really fast. This year, it's not a trend. Now, right now, we spent some time looking at some of the weaker ones. Now what I want to do is look at some of the stronger inside weeks to show you what those will look like. It looks like this. So we can go for 2s up on the quarter. Or you can even go for 3s, right? That'd be another one we could scan for. So let's do 3 and 2 up. So this gives us our strongest quarters with inside weeks. So BNAI, look at this. Triple inside, right? They've been just consolidating, coiling it up. So either side of these weekly bars will get our attention because we could see a big 3. Or we could see that inside bar reversal kick in and go rev strat quarter, right? So that's pretty interesting. And that should be volatile unless they're just done trading BNAI. All right, EQNR. Look at this thing. And you can see 2-2 reversal all the way up, slight lower low, all the way up, and then inside week. So it's right under all-time highs. This would be trying to break out as an inside week up. It could also be a crowded position where we see gap up sell, profit taking. But for now, they're buying this while the whole market craters. It's pretty strong. We call that inside bar during high volatility. And if you want a good example for what those can do historically, we can go to gold. Every time gold had an inside year, look at this. Inside year, crater. Inside year, rally. Inside year, outside year. Inside year, rally. And that started it all off. If we go to the month, last month, inside month, destruction. So when you get inside bars, that matters. That will increase volatility. We get a SEDG, Solar Edge. Let's see it. It looks like a Cathie Wood stock. Because it did good for a little bit and then destroyed. But it's been higher. So look at this. The broadening formation, much like Palantir, when people don't believe these things, we got all year, right? Maybe something happens there. I'm not sure. Now, it isn't the strongest in the world, but these would be your 3s you're working with on the month. You can see with this, slightly lower, goes back up. And then we got the inside week as momentum. Oops. Inside week as a momentum signal. If they're going to try and go all the way back up. So maybe, maybe not. Either way, they're moving this month. So if that goes outside week, we could still get a nice big move off that. That'd be 30%. We call that inside week during high volatility, a solar edge. LNG in the energies. And the reason these inside bars matter is because they are agreeing at higher prices, right? Like you have to look at this and notice inside bars. They agree on prices and then the buyer bids it up. They agree on prices, buyer bids it up. They agree on prices, buyer bids it up. They agree on prices. So if they agree on prices here and that buyer wants to keep buying more, they can do that. Let's see. BTU, another energy name. It's inside month up. It's right at the top of the broadening range. So you can see it could go both ways. So we'll see. We'll see a lot of energy names on this list. Venom, Viper Energy. So if the energies are going to keep going, we would want to see these all follow through. SEI Energy. Right, so these guys don't look too hot. Like so, right? Crowded trade. Everyone's long this thing, and it's a little closer to reversing back through here. So SEI for the contrarian. Maybe. And we call that contrarian because the whole energy market's going up. But you have to realize if the whole market in the energies is going up and you bought the one that's reversing and going like this, you're going to sell, right? And it's just going to really rip back through that. So we'll see. It is still technically stronger in the market. 2 up on all time frames in SEI. DLR. Inside month, double inside week. So this is real estate. I normally just don't trade them, but you got a nice broadening formation in here. And you'll see how this broadening formation has been whipping everyone around in here. Testing both sides multiple times. That inside month should get them moving. And we will have a full monthly vid coming out. Just going through and showing you guys some of your inside weeks. So we can see CCJ. Tried to buy this one last week. It was not quite strong enough to take this out, so it didn't work. And the way we knew that is we bought it here. It gapped up. They started selling. We got out. And then when it reversed here, it was definitely get out of that thing, and it didn't work. It's okay. Then it goes inside week. Let's see. You got that shooter quarter setting up. That could cause some issues in the uraniums. We'll see that here in URA. And what that shooter is showing you is this big broadening formation. So don't get it twisted. Hammers and shooters are also broadening ranges. Just looks slightly different. Bang, bang, bang. They're trying to do it again. So we'll see what comes of it. Mining, basic materials, SSRM. Big red month, but then big green week. You can see they make the higher low with the inside week changing continuity here. Now, at this point, when we look at this, we're going to be right in the middle of this month. So it's not exactly what we're looking for, but maybe we'll have to see. You can see quarters do have that big upper wick on the quarter. Did I say quarters? I meant materials have that big upper wick on the quarter, but we have this inside week. So all material names become more interesting. And to speed this up for you guys, here it is. Yeah, so what you want to think for those questioning about the opens. Sorry, I'm just reading this. Have we discussed XRP? No, we can right before we end it off here. But so you drew the open lines, week, month opens as a demarcation line. Would you look at the prior week, month, quarter lows? Yes, that too. But you have to know what those lows or highs represent. Because last month's highs could be a signal. It could be all-time highs. It could be the reversal coming off all-time lows. It could also be last year's highs and last month's highs at the same time. When things happen matters, and if there's a signal matters. Position 3 energy calls, P&L day $19, open P&L $6.50. Very nice. I reduced some of my energy position into the weekend, but I still have a good, I'd say a good bid on. I can double check and see what that looks like. But we had a question about XRP. So if you watch my XRP video, we were very, very clear. I couldn't have been more clear on what we need to see this year. In order for XRP to work to the upside, it's got to be green on the year. At this point, still red. But notice this, right? They sold it down 40%. Now, if it could come back to the open, it's likely to go more than 40% the other way. So if we can change that, then we can start talking. And how would they change it? Well, this inside month, you've got to break last month's highs first, right? So at this point, nowhere near changing it yet. Now, if we go to a lower time frame, you can try and time the buy, like we said. If you're going to time trends, you want to time the broadening formation like this. Literally, it would look like this. If we're trying to get an early entry, we're trying to do this. We have the lower low, and then we would have the higher high to target up in here. Now, at this point, inside week, so we don't have that for evidence. It's nowhere near reversal yet. And the month is inside. So inside week, inside month, right? It's not really doing much, but that also means this, you should get some rejection at least. Let's see. Went 2% lower. It's currently 2% higher. Could go 4% pretty easily. But that yearly open, that's what really matters to me. Yeah, just from last week, I've let's see what. Like $4,000 in open energy positions with a mix. And then I have some longer term stuff as well. It takes into account the Greeks. You can, if you want. But the thing is if you're on an options chart, you're going to have a lot more trouble simply due to less liquidity and due to Greeks. You have to realize options are derivative data. They're derivative instruments, which means what? They're derived, right? Like if I say this PB2, and if you don't know what that is, powdered peanut butter, if it's on my counter, I would say it's a derivative of peanut butter. It's derived, or a derivative of peanuts, more specifically. It's derived from peanuts. So without the peanuts, there's no peanut butter. So in this case, if the price of the underlying is going in our favor, that's what we want. Now, if the option can jump around without any movement in the underlying, just due to the options markets and potentially news and other things. Like, for example, if you're in an options position and let's say you bought a call and you're a couple dollars in the money and you bought like 8 months out, whatever, it worked. And then something happens and the CEO tweets out on Twitter and he's like, I'm about to announce some amazing, really good, cool news. Your call contract is going to jump. The underlying didn't move. So if you're going to base it on the option contract, you just have to understand the option can move without the underlying. Which, if that's what you want to do it. That's okay. It's still technically price action, which means it'll work. But that also means if, let's say you're playing options on XRP and you go like this, and it works, and then it starts coming back, and then it goes like this. When this comes back to here, the actual options value but if the underlying, if XRP comes back to here, the actual options value might have been something more like this because they're parabolic. And, depending on your time frame and how long you have in the contract, obviously that can differ. But because of that, if this is true on like a weekly time frame, it's also true on like a 5-minute. So if I enter a 60-minute signal and it breaks and it stays above that level, if the option contract goes 20 cents below where I bought it, I want to risk that because my signal is still good on the underlying. So that's kind of how I think about it. Now, if we go and look at options contracts, I'm actually not sure. I don't know if I have options on here. Let's see. I don't know if TradingView lets you look at them. Let's see. I don't think I have the data Does TradingView let you open the contracts? I know Thinkorswim does. Yeah, these ones are pretty illiquid. On the underlying, which could be wider than on the actual option. Yeah. But if I say above this level, we have zero reason to believe the market's going down, and the option wicks me out and then goes without me before coming back below that level, I didn't follow my plan. And I didn't follow the evidence. It's like if I get on the freeway, or let's say we're betting on traffic. You have a car and it pulls out on the freeway and it's on I-94 and it's going to, let's just say it's going to Chicago or wherever that goes. It's going to Chicago. If I bet on that, I'm like, this car's going to Chicago. And then the car changes lanes and it's like right on the exit lane to get off the freeway, but then it switches back. It's still on the same freeway. It's still going to Chicago. I want to stay in that trade. Now, if the car gets out or gets off the freeway, starts going the other way, goes to like Indiana. Yeah, I want to get out. So it's better if you're trying to create winning positions on stock movement and use options to leverage it. I would say it's better to use the stock than the option underlying, which also means you need to account for time. Don't worry about getting caught up in a leg, just making a lower high, trying to go long off a 2-2. If you're timing it right, no. Because this is the thing. People think lower highs and higher lows are like, oh, we're in an uptrend. Price should make higher lows and higher highs. That's true. But what does price actually do? It's making lower lows and higher highs over and over. Now, those higher highs can be directional. So if we go to the quarter on uranium, right? Let's see. What did price do? This was the best resistance level, right? Slightly higher highs. There's your higher high to this high. People will say, well, this is a downtrend, Alex. That's a lower high. Well, yeah, if you're on a yearly time frame, that's a lower high, right? This is a quarterly chart. This is a 2 up. It's a trend up on the quarter. This is a higher high to 1, 2, 3, 4, 5, 6 quarters of price action. 6 quarters. How many years is that, right? This goes from 2017 back to 2015. So it's a higher high to 2 years of price action. That matters. And then it goes the other way. And it goes lower lows to all-time lows. Like this. And you could draw it flat. You could draw it broadening. Ideally broadening. Is we'll get more of that move off all-time lows. But we make lower lows and we start coming back in through here. And you could have been the guy, right? We could have tried to time it here. It didn't work. Notice when the month was green here, it just did not go anywhere. That's fine. The month went green here and then it went really far, really fast. You made a lot of money. So you can lose a little, make a ton because you know where it's trying to go. When this is coming back in here, what do we know to be true? It's not opinion. The pivot machine gun, all these lower highs plus a signal. So we go in here, we have all these lower highs. We just have to pair it with the signal. Now in this case, we don't have any actionable signal that broke in here. Unless you call this 1, 2, 2 reversal, right? But if we can find a signal such as the 3-2-2 month right there, anytime above 1135, right? We're getting on the freeway. It's going up. So from here into these higher highs, because it made new high, all the way down, new low, all the way up, huge, gigantic. And you can see you'd be risking what, 60 cents on a monthly basis? And this goes $20. Just seeing new low, new high, new low, new high, all the way up in here. And it gets much higher, right? So it went a lot higher than this high. It's because it's broadening. It's getting bigger over time. It went from, if we look at it, it went from being really small on this side of the chart. Literally, this is how big it was Went from here, we touched the highs, and came all the way to here, and then all the way back up. It went small, bigger, bigger, and then this is all consolidation. And then you'll see they finally start growing in here, getting bigger again. Which you can see better when you look at multiple time frames. So if we go at the quarter, you see this, 3. Broadening formation, and then it goes 13 cents lower, 16 the other way. So if you can time that with a signal, bottoms of 3s, tops of 3s, or you can time signals to cause price to come back above previous lows, like right here, or signals to cause price to come back below these previous highs. You don't have to be right every time. You can be right 30% of the time. You can still make a lot. I did not see what you were discussing here. We're looking at this 2 down in green hammer. You could either draw it like this, right? New low, new high, new low, new high. Or you can draw it like this. This created a new low. Then this was new high. And then you'll see they went slightly higher, and then they went new low, and then they went new high. Either way, you're still seeing this broadening formation that's getting bigger with time. And then it breaks out here, which is pretty nice. But that is all we got tonight. Again, going into next week, energies are still strong, indexes are still weak, and things that didn't go down last week, material sector. That's notable. And that really sums up what we're going to talk about today. We'll have more to talk about Monday and Tuesday as we gain evidence over the week. Again, Tuesday morning, the second 60 of the day, that's when we have the most evidence. So we'll see what they do Monday morning. But yeah, double bottom, I'd let it get taken out too. But that is all I've got for you guys tonight. Thanks for tuning in, and hopefully we'll see you guys again soon. Check us out at stratealerts.ai. You can join there for free on the front page and get into our Discord for free as well if you're not in there already. But that's all I've got. See you guys, and have a good rest of your trading week.